In this video, I'm going to take you through how to properly use this indicator called MACD. That is MACD. MACD. MACD is actually an acronym that stands for Moving Average Convergence Divergence. So let's first of all put it on the chart so that we know what we are dealing with. So to get it, we go to Insert, we go to Indicators, but I would love you to, it's actually an oscillator, but I would like you to select MACD from the custom side. So this is MACD here. Alright, so if you come to MACD, on common, allow external expect imports, and then when you come to input, the fast exponential moving average period should be 12, and then the slow exponential moving average period should be 26, and then the signal simple moving average period should be 9. So this is actually your signal. So when all this is set, you click on OK, and here we are. Now if you don't like the color, you can double click and it will pop up back, and you go to colors, and then you can change it. So if you want to change it, you come here. Let's say if you want it blue, you click blue, you click OK, and here you are. Let's say if you want to change the signal color, you double click, and then you double click on the signal color, you click the drop down button, and then maybe say yellow. Okay, and there you go. So basically this is how you insert the MACD on the chart. So this is MACD 12.26.9, and this is how it looks like. Alright, now let's talk a little bit more about MACD. MACD is an indicator that is also important to we traders, and we use MACD to identify moving averages that are indicating a new trend, be it a bullish, that is a buy trend, or be it bearish, that is a sell trend. Our focus as traders is being able to locate a good trend, because there we make the most money from. As such, it becomes an important issue to us. Let's try to understand how this indicator is made up and how it works. The MACD is made up of 12, 26, 9 as parameters, which is usually the default settings for most charting packages. The bars of MACD, these blue bars here, You can see them, these bars, so when you see the bar of the MACD is the number 9, this 9. You know, we set them the fast, the slow, and then the signal. So the number 9 is the one which is the signal, is the one that is used to calculate the moving average of the difference between the faster and the slower moving averages. The bars are the plotted vertical lines that we can refer to as histogram. This one, right? This one. All right. Now, how do we use MACD? How do we use MACD? It's important that we understand how to use MACD. The MACD has a setup. The MACD has a setup. So let's try to follow this simple setup of MACD. To use MACD as an entry point, you need to take note of these simple things or instructions. There is a 0 zone here. Just look at the cursor. There is a 0 zone here. You can see this is the 0 zone, this horizontal line. You can see it here. Okay, this horizontal line from left to right, right to left. So you can see that it is the bridge between the down 10 and the up 10. The bars or the histogram is what is used as this and the histogram is what is used or what represents MACD, right? And then the moving average, this the yellow line, the moving average, this yellow one represent the signal. So when you put the cursor on it, well, you will see that it shows MACD, time, and then signal. When you go here, it shows you MACD. All right, so it's important for us to identify this line and these bars and this bar. All right, so how does this signal line or the moving average line and this histogram and this 0 zone, how do they work? Or how does MACD in total, how does it work? Let's look at it this way. For a buy trend, the bars will have to cross, like here. They will have to cross above the 0 and above the 0. So you see these bars, they have crossed and then they are what? Above what? The 0. Then also the signal line, this moving average, this signal line will also have to cross the zero. We'll have to cross the zero upward. We'll have to cross it upward. Now, when these two conditions are met, or when these two things happens, when the bars goes up and then the signal crosses, then a buy trend is formed. Then a buy trend is formed, and this actually depends on the time frame that you may be using, and also it also depends on your trading strategy. Then you may go in, that is, you may place a trade for the buy trend. Now, the more the bars continue to increase, like you can see from here, it's increasing. The more the bars continue to increase and stretched up like this, like the first, the second higher than the first, this higher than this higher than this higher than this. So the more they stretched up, the more the price of that currency pair or the instrument in question is likely to rise, hence more profit on this very buy position. For example, you can see that as it started here, as it's going up, you can see also here that you can see that the price is moving up. The MACD indicators here, the MACD indicator, that is the bars and the signal line here, we are actually looking at it, analyzing it in connection with this price line, this trend. So you can see that as the bars increase, the price line also increase. All right, so it is as easy to understand. Let me take it again. For a buy signal, using MACD, the bars will have to be above the zero. They will have to be above the zero, like we can see here, or even here. And this signal line, this moving average, which is the signal, will also have to cross above the zero zone. When this is done, it indicates a buying trend. As such, you may buy. The longer the time frame, the better when using MACD. This, we are in the 4-hour time frame, and you can see that as the bars are increasing, the trend is also going up, the price is rising. So this tells us that it is going to buy more, and we can see it here also. On the other hand, for a sell trend, the bars will have to cross below the zero zone, and also the signal or this moving average will also have to cross below this 0 zone. When these two conditions are met, then a sell trend is confirmed. Then you can place your trade. It's important that at times you wait when the bar crosses below, or when the bars have crossed, so that they are below the 0 zone. It's important sometimes, mostly, to wait for the signal also to cross. Then the trend will be firm. And it's also important to check with other indicators, to cross-check with other indicators before placing the trade. So when these two conditions are met, that is the bars crossing the 0 zone below and the signal crossing the 0 zone below. When this happens, then you can place your trade for a sell. And the more the bar stretch downwards, the more the price is likely to fall, hence more money for a sell trade or a sell position. Remember, the longer the time frame, the better. It works the same way in all the time frames. You can see here in 1 hour, when the bar crossed and the signal line crossed the 0 zone, you can see that it has been buying and it's been going up. And it's obvious that it will start from the lower time frames before even showing on the longer time frame. So you can start you can start entering your trade from the 1 hour and monitor it through to the 4th hour and the daily time frame, if you want to stay in the market for long, or if you are placing a long trade. Like I said earlier on, it all depends on your trading strategy. If you are a scalper, then it means that you will be using a shorter time frame. If you are a day trader, you'll find out that you'll be using between 1 hour and 4 hour in the daily chart. Now, how do you actually confirm MACD to be a matured trend? This is how it works. Confirm with at least check from 30 minutes. For example, for a buy trend, check for 30 minutes and make sure that it is above the 0. At least 3 or 4 time frames must show that the bars and the signal line are above this 0 zone, right? Like the 30 minutes, it's above the 0 zone. The bars, the signal line is above. 1 hour, the bars, the signal lines are above. In 4 hours, the bars and the signal line are above. And on the daily time frame too, the bars and the signal lines are above. Even if we check the weekly has just started, so we can say that this Euro USD is going to be a long buy, because in the weekly time frame too, the bar has started, and by the time the signal crosses the zero zone, it will have bought more. So by the time it will start to buy in the monthly time frame, if you started your trade here and left it, you'll find out that you will be making so much money. What it means is that it requires patience as well, just as other indicators that we looked at earlier on. So it's important that we understand that the bars and the signal line must cross above the zero zone to confirm a buy trend. And let's look for a sell. And it's important that the bars and the signal line must cross below the zero zone to confirm a sell signal. When this happens, you can enter the trade knowing that it is going to sell for long. In 1 hour, it's just trying. It just started. So if probably you want to place your trade in 1 hour, you have to wait for the bars to at least stretch down, and then the signal must cross this zero zone to confirm the sell. So in 1 hour now, we cannot say that there is a sell trend or there is a sell signal. There must be a confirmation. And if we come here, you will find out that it is on the buy. It is on the buy. And if we come to daily, it is on the sell. And if we come to weekly, it has just started a sell. The bars, there are 2 bars here, but we'll have to wait for the signal to also cross. So if we want to analyze this now, let's start from 1 hour. Here the bars have just started and it hasn't crossed, so we don't have any entry point. There is no trend or a signal there. Here it has crossed. The bars are above the zero zone and the signal is above, indicating a buy. But as I said earlier on, at least check to have 3 or 4 time frames confirming same direction with the bars and the signal before you go with it. Now on the daily, it is a buy, it is a sell, because the bars are down, the bars are below, the signal is below the zone. So if we check the weekly, the 2 bars are below, but the signal is not yet. So it is not a clear trend as to whether it's going to buy or it's going to sell. All you need to do is to leave it and analyze a different trend. But that is how MACD works. It is important to confirm with different time frames to see the bars above the center line or the zero zone to be certain on a buy trend. and likewise the sell trend too. Confirm with different time frames before making a decision, because it is a picture, it is in a picture form, and you can see its movement. You can see its movement, but it is simple. The things you need to keep and look out for is the bars crossing the zero line and the signal or the moving average crossing the zero zone or the center. This is the center for MACD. So when these conditions are met, then you can place your trade, be it a buy or a sell. MACD is also used to check, or it's used for analyzing trend or price continuation. Yeah, that is why you have to check with different time frames. And if, let's say, weekly, daily, and 1 hour is rising, that is all of them confirm to be above the zero zone, then it will be, or is likely to be, a buy trend. And if the bars in, say, 4 hours, daily, monthly, and 30 minutes are all showing the bars and the indicate and the signal below the center or the zero zone, then it's likely to go long for a sell. That what it means, that the price will be falling more. The price will be falling more. It takes practice to perfect this and to use it effectively. The more you practice it, the more you will know. The MACD works the same way on all time frames, be it gold, be it indexes, futures, commodities. It works the same way. 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 So you can see this is the fetch 100, and you can see that the trend is buying, and the MACD bars and the signal are also going up, and they are above the zero zone. If we take sugar, in 4 hours, you see the bars are down. Let's look at the daily. The bars are down, and then the signal line is also down. Let's look at the weekly. The weekly, the bars are down and the signal is also down. Let's look at the monthly. The monthly is still far coming. So we can confidently use MACD if we understand just these two conditions, that the bars must cross so that they are below the zero zone, and the signal, the moving average signal, must, this is the simple moving average, which is the signal, must also cross the zero zone so that they are all below. Then a sell trend is formed, and if for a buy both the bars and the signal must cross so that they are above the 0 zone, and then you confirm with other time frames and you pick the majority, and then you can confirm with other indicators before placing your trades. I believe that with practice, patience, persistence, this indicator will take you far in the trading business, and it will give you lots of profits, and that's lots of money in the long run. So all you need to do now is to practice, and then you will see the results coming. You first have to believe. When you believe, you take the action, and then the action is going to bring the results, and then your belief will increase, and there will be consistency in its usage and also in your profits. Thank you.